Good afternoon, ladies and gentlemen, and welcome to the Quantum Papers Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Velorim Advisors. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Velorim Advisors. We represent the investor relations of Quantum Papers Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and first half of the financial year 2026. Before we begin, a quick cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Pawan Khaitan, Vice Chairman and Managing Director, Mr. Vikram Khaitan, Chief Financial Officer, and Ms. Prati Sharma, VP Corporate Strategy. Without any delay, I request Mr. Pawan Khaitan to give his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi. Good afternoon, everyone. It's a pleasure to welcome you all to our earnings conference call for the second quarter and first half of the financial year 25-26. I would like to thank you all participants for joining us today. The paper industry continues to operate in a challenging environment, characterized by elevated input costs, particularly for wood, and subdued realizations amid persistent inflow of low-priced imports. These pressures have impacted margins across the sector despite steady demand and improved sales volumes. The situation has been further compounded by recent changes in the GST rates, with tax on paper and boards rising from 12 to 18%, while converted products such as mono cartons and corrugated boxes reduced to 5%. And in relation to our industry, the notebooks and paper for notebooks have been made nil-rated, resulting in an inverted duty structure. This has led to higher working capital requirements, blockage of input tax credits, and increased vulnerability of domestic manufacturers to cheaper imports that are not subject to similar embedded taxes. The industry has represented this anomaly before the government and the GST Council for suitable corrective action. Also, the industry continues to actively engage with policymakers, seeking suitable safeguard measures to curb the rapid influx of low-priced coated and uncoated paper imports into the country. Encouragingly, there are early signs of moderation in wood pricing with improving availability, though sustained policy support remains vital to restore profitability and stability across the value chain. On the operational front, I am pleased to share that following the upgradation of our paper machine 4, we have achieved our highest ever monthly production of 8,303 metric tons in September on this machine, as well as the highest ever daily production of 360 tons in July 2025, a reflection of the enhanced efficiency and reliability of our upgraded system. We expect to further improve our production numbers on PM4 as the machine stabilizes and runnability improves. Under Project Nirman, our Industry 4.0-led AI-based transformation, the initiative and the Advanced Process Control Baseline Study for PM4 was successfully completed during the quarter. In terms of product innovation, our team has developed a new grade, Kappa Premium 3, which is a cream-based paper, on Paper Machine 3, which serves as a base paper for coating applications, further strengthening our product portfolio in the specialty range. We have made significant progress on our mill expansion and upgradation project. The double displacement system DDS for our wood pulp mill is advancing well, and once commissioned will enhance the quality and yield of our wood pulp while delivering operational cost savings. The installation of 2 multi-grade filters, MGFs, for surface water filtration has been completed, which will improve the quality of input water used in our production. Further, we are proud to have successfully executed European Union Deforestation Regulation, EUDR, and Forest Stewardship Council, FSC, compliant orders in Q2, reinforcing our strong commitment to responsible sourcing, combating deforestation, and promoting sustainable management of natural resources. We achieved our highest ever quarterly distribution of 18.21 lakh clonal saplings under the Social Farm Forestry Program, taking the total number of beneficiary farmers to 17,343. This initiative not only strengthens our raw material sustainability, but also continues to create a meaningful socio-economic impact in rural communities. With that, I would now like to invite our CFO, Mr. Vikram Khaitan, to share the financial highlights for the quarter and half year. Over to you.
Thank you, sir, and good afternoon, everyone. For the quarter under review, our operational income stood at rupees 280 crores, reflecting a sequential growth of 25.5%. This increase of rupees 57 crores over the previous quarter was primarily driven by higher paper production and sales following the successful upgradation of Paper Machine 4. Overall production during the quarter was higher by 3,500 tons as compared to the same period last year. The EBITDA for the quarter stood at rupees 34 crore with EBITDA margin at 12.3%, lower by 582 basis points on quarter-to-quarter basis. The contraction in margin was mainly due to decline in net sales realization by rupees 3,200 per ton, in line with the overall industry trend impacted by cheaper imports. In addition, production cost increased by around rupees 1,300 per ton, largely on account of higher agro and wood-based raw material prices due to the floods in the Punjab. Our PAT for the quarter stood at rupees 6 crores, translating to PAT margins of 2.07%. For the first half of the financial year, operational income stood at rupees 503 crores. EBITDA during the period was rupees 75 crores with EBITDA margin at 14.88%, while PAT stood at rupees 18 crores with PAT margins of 3.54%. With this, we can now begin the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madhur Rathi from Counter Investments. Please go ahead.
Sir, thank you for the opportunity. Sir, I wanted to understand, with all the CapEx that we are doing on the paper machine expansion as well as towards our wood pulp and water processing machines, sir, where do we see our EBITDA per ton improving over the next 2 to 3 years?
In terms of value, obviously it will increase because from our current 450 tons per day capacity, paper producing capacity, we intend to reach about 650 tons per day. So this increased production volume, which we do not see any problems in selling in the market, certainly will give us added both top line and bottom line. We see our EBITDA margins going up to, let's say, close to 18 to 20% under these challenging circumstances. And if the environment grows beneficial towards us with better realizations coming in, we could see a bump up in the EBITDA levels further.
So what is the cost of production? What is our current cost of production, and how much reduction is expected with all the wood pulp machine, the water machine, as well as expanded capacity?
So we are in the range of about between 50 and 55,000 rupees per ton on our cost of production, and this difference is due to the different grades of paper that we make. This is likely to see a reduction of between 7-8% going forward with increased efficiencies and the better yields on our pulp, better quality of pulp, and also because of the 4.0 transformation AI-based initiatives that we are implementing in our operation.
Got it. Sir, you mentioned that our cost of production, we were hit by higher raw material cost during the quarter. So, what is our current mix between the agro residue and wood pulp in our raw material? And sir, with the premium paper that we are going to manufacture going forward,
right.
What is the expected mix between wood and agri residue we can expect maybe over the next 2 to 3 years?
So our current sort of engagement with fiber is about 50-50, 50% agro, 50% wood. That is going to remain very, very similar going forward, except for the fact that in certain grades we can intentionally change this mix to suit the kind of quality that we want. But on an overall scale, if you see the monthly production figures, it will translate to 50-50 both on agro and wood. And going forward, we will see a reduction in our wood pulp pricing with our implementation of the DDS technology, and which will give us better yields and better pulp quality, and that will greatly benefit us in our operations.
Got it. Sir, so is it fair to assume that most of our expanded 650 metric ton capacity will operate at optimum utilization in FY27?
Yes, that is clearly the intention, and we are very confident that we will achieve that.
Okay. Sir, so is it fair to assume that we can expect a 30 to 40% volume growth next year?
Yes, we should be able to achieve that.
Got it. Sir, just a final question from mine. Sir, what is the peak cost of debt that is expected? What is the peak debt and the cost of debt that we currently have?
The peak debt, we are going to be in the range of between 600 and 650 crores. That's on the term loan. Working capital is very, very consistent at between 50 and 80 crores, which is a very, very low kind of working capital for our size and scale of business. And cost is in the range of 8.5 to 9%.
Got it. Sir, thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Arihant from Bowhead Investment Advisors. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, I wanted to know, have we taken any price increase because of the inverted duty structure? Has there been any price increase or any change on that front in our post after the GST changes?
No, Arihant, at the moment there is no scope for any kind of price increase. And in fact, what is happening is that the government is pushing the entire industry to pass on the entire benefit of the GST reduction. So they are also sort of trying to monitor that we pass on this entire benefit to the customers. So it's going to be not going to be easy passing on increase, even though there is going to be an impact of higher cost of input tax credit that we will need to reverse. So that is something that we are still debating on how we take impact of that and sort of take a call accordingly.
And sir, in respect of representation made to the government and GST Council, any rough idea by when you are expecting to hear from them or expect them to make changes?
We have been informed that in the very next GST Council, this revisit of this entire anomaly will be done. And as and how that GST Council meeting happens, we are going to get a revert from the government.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Madhav Jhawar from SKP Securities. Please go ahead.
Hello. Hi, sir. I wanted to understand, after the changes of GST, how has been the sales and what kind of trend do you see going ahead?
So we are trending very good on volumes going forward. It's just that the market landscape will need to change for us. We are taking a cautious call of not really promoting paper sale for notebooks. I'm sorry, I'm hearing a lot of disturbance in the background.
Mr. Madhav, I would request you to please mute yourself.
So all we are doing as a strategy is that we are concentrating on sectors which do not require us to push out paper for notebooks, therefore preventing our sort of input tax credit reversal as well. And I think a big step in this direction will actually come when we upgrade our PM3, which will happen by next year. We, in any case, will be offset by not needing to sell in the notebook segment because our paper qualities on that machine will be such it will allow us to make more volumes of maplitho grades and enter an entirely different product segment.
Okay, thank you.
Thank you. The next question is from the line of Deepak Ajmera from IGE India. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is from the respect of that is latestly import duty has been reduced from the paper board purchase from the Southeast Asian companies. How do you see the impact of the same?
Well, fortunately for us, Deepak, we are not in the paperboard segment at all. We are in the writing and printing segment, and any impact on that is not really visible on us. But yes, the imports on notebooks has also reduced to 0%. That is somewhat impacting us. But as I suggested, we are altering our strategy and trying to come away from the notebook segment and enter differential grades of paper which are there in the maplitho and higher value-added segments.
How do you see the impact over the overall industry?
Yes, we are seeing a slight bit of impact in terms of increased import volumes in this current period as well as Q1. We have witnessed about 7 to 8% increased volumes coming into the country of imports, and in terms of metric ton wise, it is close to about 1 million tons plus. So this is something which at the moment is affordable and something that can be taken into the levels of competition by the industry, but only time will tell whether the government comes to the industry's rescue and puts in the necessary impediments to further increase in imports. because that has happened. The MIP is in place for paper and paper boards, and a minimum import price regime has come in. And the fact is that an MIP regime is under consideration by the government for the writing and printing paper segment as well now.
Okay. And the industry has been lately pushing for BIS. So how do you see progress of the same, and do you see it getting implemented, and what could be the potential impacts?
You are saying pushing BIS, which is a certification
on import from Southeast Asian countries.
So that's what I said. The government is considering putting in place an MIP on imports, which is a minimum import pricing mechanism, and which will certainly going to be helpful towards the industry.
Thank you.
Thank you. The next question is from the line of Khushi Parekh from Buckle Rock PMS. Please go ahead.
Yeah, hi, sir. First, I just wanted to understand the reason for decline in the volume this quarter. Is it purely related to the flood situation or something else as well?
I'm sorry, we have shown an increase in volumes. There is no decline in volumes whatsoever.
Okay, so I think, sorry, just a moment.
In fact, while our CFO had made a statement, he suggested that there is an increase of 3,500 tons in this quarter compared to corresponding quarter.
Is it because of some reclassification that was undertaken? Because, I mean, from what I have been recording, 42... Oh, sorry, it's 3.5%. Yeah, sorry. So, okay, my bad. Apologies for that. What about realization, sir?
All this volume increase has clearly happened because of the upgradation that we have taken on our PM4. It is helping us get in increased volumes of paper production, and that has helped us get these additional volumes in Q2.
Right. Wonderful. So, so apologies, my mistake. I saw some wrong numbers on this. But apart from that, we continue to maintain that once the capacity comes on stream, we have largely a ready market for our products, and we should be able to, sell. And this is despite the imports that we are witnessing that are increasing.
Yes. So largely the increase in import volumes is happening in the notebook category or the paper for notebooks, for which the government has given out a 0% duty structure. And as I shared earlier, we are strategically trying to get away from that market for ourselves and enter into differential markets for which our products are very, very well placed to enter.
So currently, what percentage of our products would ultimately be resulting into notebooks?
We were selling about 22% of our production in notebooks, and that is also because two of our machines are making a kind of paper which the notebook industry can take. Out of that, paper machine 3, which is of a much higher capacity, that is also going in for an upgrade this year. At the end of the year, we will be upgrading that. And that machine today, after upgradation, will be able to make Maplitho grades paper and will be helpful towards and allow us not to enter the notebook segment and enter an alternate higher value added segment of Maplitho paper.
Okay. And when it comes to the margins, we saw a major decline in the margin. Of course, floods are one thing, but what do you assess how much of it is behind us and how much it will continue? And some portion, I believe, is still because of overall shortage in the raw material. So can you help us attribute where do we see the cost pressures easing, or how can it sustain further?
So we have not seen any kind of reduction in availability of raw material per se. That has not been an issue that we faced, even though there was a kind of a flooding situation in Punjab which had its impact on the availability. But per se, for our purposes, we are not seeing a non-availability or a reduction in availability an issue at all. Pricing is a little bit of a challenge right now, both from terms of input raw material pricing going a little bit higher, and at the moment the paper pricing is more or less stable, but we will hope for and we do expect that the price will come up in Q3 and Q4, which, as trending suggests, normally happens every year.
Okay, so what you are trying to suggest is that whatever increase in the raw material prices that we saw is largely here to stay for at least near term.
Yes. Yes.
Okay, so the margins that we saw is at least over near term it's likely to stay like this.
No, I'm not saying margins are going to continue like this. As I said, paper pricing is likely to show an improved upward trend in Q3 and Q4, which historically trends have suggested happens. Q3 and Q4 are far better placed on paper pricing than Q1 and Q2. So that way, it will help increase our margins. And also with the kind of implementation of projects that we are doing on our machines and pulp mill, that should help reduce our cost of production, and that is going to help amend and increase our margins going forward.
Okay, but at least from the perspective of raw material, it is still likely to remain under pressure, is
yes.
basically
Yes.
the sense.
Yes.
Correct. Okay. And we discussed some time back about industry making the representation with the government on having first of all, this GST council is something which we just need to wait. But when it comes to minimum import prices on the products, which is impacting the industry, so what are the representations made by the industry in its own favor? Because I mean, see, ultimately, even government needs to have some incentives to make the those regulations. Like, say, for example, in case of steel industry, time and again we have seen that in the interest of national interest, because steel is a critical thing for India, government has time and again protected them by having anti-dumping duties and all. So what is it that in favor of paper industry that we can motivate the government to make these things?
So the way that we have represented is that whatever are the consumption data that we as a country exhibit, the paper production in India is very, very there to take care of the entire consumption. So whatever imports are happening is primarily leading to an increased supply status, and that is helping coming in and impacting and disturbing the supply-demand ratio in the country. And that is impacting the industry performances quite dramatically. As we are seeing and witnessing, the industry margins have gradually reduced over the last 2-3 quarters. And that is what we are sort of reminding the government that if this is allowed to continue, then the industry is going to face a severe crunch in terms of maintaining margins and maintaining profitability.
Makes sense. And I don't know, I mean, how you, our company is also representing, but we may just want to point out to the 2012-13 period when the industry was in great difficulty as well. So
Sure.
I think that is something that we may additionally want to highlight.
Sure.
Anyways, so these are my questions. Thank you for this.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Manan Palotia from NKB Securities. Please go ahead.
Hi, sir. Good afternoon. Congratulations on a good side. Sir, I have a couple of bookkeeping questions for you and then something else. So my first question is with regards to the slide number 8, I think, in your earnings presentation, where you've spoken about the EBITDA margin decline because of the NSR and the production cost. I was wondering if you would be able to put our NSR and production cost for every quarter up in a graph on the PPT, so that I think it's a little bit more easier for us to understand what is driving the EBITDA margin. Would that be possible, sir? Like, is that information that you can give out?
No, I don't think we will be able to do that, because that is something which is very germane to our operations, and I don't think there is any kind of policy suggesting that companies declare and share these very detailed.
Oh, no.
data.
Of course, there's no policy, sir. That's all right.
Yeah.
Sir, my second question is with respect to the PM3 upgradation. I was under the impression that the original plan was to do it quarter by quarter, like one machine per quarter. So, have we delayed it to next year, or how is that?
There is only a very slight marginal delay happened, because PM4 was delayed because of the India-Pakistan war, unfortunately, though we were able to restrain the delay and impact to our favor. So PM4 got upgraded in the month of July. PM1 is now slated for December, PM2 for January, and PM3 for March.
Okay, so we'll be done with our 675. I think so. In March we'll be at 675 MT, right?
Sure, we will certainly targeting to achieve that.
Right. And so this new product that you've developed, I think Kappa Premium Free CRP you called it. So
Sure.
what is the how do we think about? I know this is only one product in a lot of products that you want to launch. But if you could give us some color as to how we can think about realizations or margins versus your current product that you're coming out of PM3, I think that would be great.
So PM3 is being upgraded with a size press, which will help us make maplitho grades of paper, which will be helping us enter or sort of increase our volumes in the maplitho grades and the high design paper segments. Also, we are going to be putting up an offline coating plant, and which will help us make grades of paper which at the moment we are only supplying these base papers to converters outside, and they essentially add the laminate and barrier coatings and sort of translate the paper characteristics to make them suitable for differential applications like these straws for liquids, then differential qualities like cup stocks and things like that. So we will be able to make all those qualities within premises once our offline quota comes in, and we will be able to market these as products itself.
So are we planning to go D2C with that? Like when you say disposable cutlery or straws perhaps, is that something that's on the card for us?
No, not in bigger volumes. We will largely restrict ourselves to B2B, because we've got a very large and hungry dealer network, if I can say, and we do not want to spoil their chances of doing good business. So we are sort of very, very beneficially inclined towards their growth, and we will be availing of their presence to sell all these grades of paper as well.
Right, sounds good.
So
Thank you for answering my questions. Sorry?
Okay.
Please go ahead.
So it's only the paper that we will be making which can directly be converted to make a cup or a straw. We will not be making the cup or a straw ourselves.
Okay, I understand, sir.
Yeah.
Thank you.
Okay.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity. Sir, currently what percentage of our products would be value added, and where do we see this increasing over the next, once the 675 metric ton is operational, right?
So currently our specialty paper segment is at a level of between 20 and 22%, and we are targeting that this will touch about 28 to 30% going forward of increased volumes.
Got it. And sir, what is the margin differential or the realization differential between the normal paper we produce and the specialty paper?
Specialty is helping us get about between 2.5 to 3% more. This is in terms of pricing. This is in terms of pricing, but obviously there are cost differentials as well, and there is a large portfolio of specialty papers that we make. So I won't be able to share how.
I'm sorry to interrupt in between, sir. Your voice is breaking in between.
So margins. I'm not talking particularly about margins. I'm talking about pricing is about 2.5 to 3% higher than our normal grades, but there are related cost structures which are differential, and since we have a very large portfolio of specialty papers, they function very differently. But it helps us maintain a very large portfolio, and our presence in the market is better off that way.
Got it. Sir, when we compare our cost of production, sir, would we be the lowest cost producer in the Punjab and North region versus Satia and JK?
Well, I think you'll have to look at their figures, but the way we are tracking our figures, and you can correct me if I'm wrong, we are seriously trying to target being the lowest cost producers.
Got it. Sir, that was from my side. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Diya Jain from Sapphire Capital. Please go ahead.
Hello, sir. Thank you for taking my question.
Yes.
So I just wanted to understand where do we stand in terms of growth in revenue for this year and also for FY27?
Well, growth, there is clearly going to be a growth because, as I said, PM upgraded paper machine 4 is already in place, giving us better volumes. PM 1 and 2 is also going to go in for an upgrade in December and January, and they will lend to the higher volumes going forward. Paper machine 3 is going to end up being upgraded by the end of the year. So this year we will see about 10% increased volumes from last year, and going forward with the full financial year 26-27, we should be touching about 40 to 50% volume growth next year.
All right. So, and you said 18 to 20% EBITDA margins for FY26 or for FY27?
Sure. FY27.
And for this year, sir, how much do we expect?
Very difficult to say, because at the moment prospects are good. Prospects are good because normally we see a pricing increase in Q3 and Q4, which is what historical trends suggest. But we will certainly try and keep it above 15% this year overall.
All right, sir. And we can assume Q3 and Q4 to be better than the first two quarters, right?
Sure.
Okay. And what is the status on our export orders? How much do we export?
We are exporting about 12 to 15% of our overall production levels.
All right, sir. Thank you so much. And all the best.
Thank you.
Thank you. The next question is from the line of Anant Mudra from My Temple Capital. Please go ahead.
Hello. Thank you for the opportunity. So just wanted to understand more about the capex that we are doing currently. So once this round of capex of 735 crores is done, would all of our infrastructure be upgraded to the best possible technologies available in the market, or do you see some more capex that we still need to do beyond the 735 crore that we planned to upgrade the infra that we have?
Well, the fact is, we are targeting to be amongst the best in the industry. But having said that, opportunities always come by because there is a lot of technology and advancement and innovation happening on the supplier side. So they are also coming up with upgraded technology. So I cannot say that we will have the best-in-class technology in the world. But yes, our attempt is to reach somewhere very close. But as and when we see a better technology coming in, we will take a call at that point of time whether we want to implement that in our operation or not.
Got it.
But also to say that once this upgrade or this capex has happened, it will be a fully integrated pulp and paper operation and all working in tandem and in sync with each other. The 2 wood pulp mills and the 4 paper machines, along with the chemical recovery and the captive power.
Got it. So have we planned or thought of any kind of capex beyond the 735 crore that we are doing right now?
There is no planning per se. It's only a thought and idea that we would like to expand on our specialty paper segments because we are gaining ground on that and possibly enter the tissue paper market as well.
Okay. And so if we have to expand capacity beyond this, would we still have scope to do some kind of a brownfield capex, or we'll have to think in terms of doing some kind of a greenfield expansion?
No, there's no greenfield requirement per se. We've got enough land, we've got enough infrastructure. It will be by way of a brownfield, but it will be with addition of separate machines now. The upgradations of these current machines that optimal capacity has been reached, I would say.
Got it, sir. And so out of the 735 crore capex, how much balance is left to be done in H2 and probably Q1 of next year?
We've currently incurred about 435 crores, but purchase orders, POs have been released for another at least 200 crores. So if you talk about fund from the fund point of view, about 300 crores is yet to be spent, for which most orders for most of those components are already in place.
Okay. And currently, sir, what is the raw material that they are using to fire up boilers?
It's a mix of biomass and coal.
All right. And biomass would be like rice husk or something like that, sir?
Rice husk, okay. and a fair bit of material that is generated in our operation, which is waste for our agro and wood pulping facility, and that we are also collecting all that waste and burning in our boiler.
Okay. And so would it be possible to bifurcate? So the current capex that we're doing is about 735 crores. How much of that is towards upgradation and how much of that is towards capacity expansion?
Well, in a way, I would say all of it is towards upgradation because there is no new component which is being added separately. Our wood pulp mill is already in place, but we are adding a line of double displacement system, which is going to only add and improve the yield of our wood pulp that we already produce. All the paper machines are getting upgraded one by one, so there is no new machine per se, but we've outlined about 340 crores for the upgrade of our machines out of the 735. Rest is going in for pulp mill upgradation, which is about close to 200 crores, and balance for chemical recovery and the power sector as well. And of course, another important part is the environment. We have to take care of our environment. So sustainability initiatives like water supply, raw water supply, and effluent treatment plant upgradation that is also being catered to in this upgrade.
Got it. So are we spending anything on the boiler or the turbines or anything of that sort? On the cost side, basically?
No, nothing on the boiler, but yes, we have upgraded our turbine from the previous 10 megawatts that we were achieving on our earlier turbine. We are now achieving of between 12 and 13 megawatts on the same turbine.
All right. So how old, would the boiler be, and is there a chance that it might come up for replacement or upgradation anytime soon?
No, I don't think so. We are ensuring that all the cogent apparatus that we have, which is boiler, turbine, chemical recovery, paper machines, all are updated to current technology. I will like Prachi to also add something here.
Just to add to that, so we did the upgradation on our power plant as recently as March 2021, and it's a very high state-of-the-art boiler from ISJEC. So we don't perceive a need to upgrade it anytime in the near future.
Got it. Thank you for the detailed answer. So just one final question. How much of the interest cost currently would be getting capitalized? Because we have some capacity which is under progress, so work in progress. So is there any interest cost that we're capitalizing?
The capitalization of interest cost is going on, and as we have mentioned in our quarterly results, that PM4 already capitalized, so that part of interest cost has been charged to the revenue. And once further capitalization will be done, then interest cost accordingly will be charged to the revenue.
Okay. So any approximate number for this quarter? How much of the interest cost was capitalized?
It will depend upon the expenditure incurred towards the capex, so it will be worked out. As of now, we can't say.
Okay. Got it. Thank you, sir. That's it from mine. Thank you.
Thank you.
Thank you. The next question is from the line of Krushi Parekh from Bugle Rock PMS. Please go ahead.
Yeah, I just have one follow-up question. You mentioned that our distributors are hungry for our products. So currently, where are they meeting their demand that which we are not able to fulfill, or are some other people are supplying to the industry?
So none of our dealers are exclusive. They are there sitting in the market, and they are dealers to as many as between 4 and 8 paper mills, depending on where they have relations with. So they are not dependent on any singular paper mill to source their material from. But we are very confident that we have a very long-standing relationship with them, spanning 3 generations. So I am seeing that the 3rd generation, which has of the family of dealers, that has entered into business, and we are doing business with them for so many years, decades, and generations. So we have a bit of a benefit there, and we are positively inclined, positively positioned to take up their business requirements.
So basically what we are looking for is that they are already supplying the products through some other mills, and we will be replacing the other mills basically.
Not necessarily, because it also depends on the quality of paper and the kind of paper that we produce. We are hopeful that we will be able to create differential market segmentations going forward. We will not cut into any other capacity, because India as a market is also growing. It's not that it is static at this current level. So it's growing at about 5 to 6% CAGR. So I think increased volumes are also there for us to take a part of.
We will also be in a position to showcase some of the input products. Once we get our machines updated, we will be producing certain specialty grades which would be at par with what we're getting from the import segment. And I think that kind of replacement of imports with domestic and make in India kind of products will also happen.
Okay. Got it. Helpful. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you all for participating in this earnings conference call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relation managers at Valorum Advisors. Thank you and wishing you all a great day ahead.
Thank you. On behalf of Quantum Papers Limited, that concludes this conference. Thank you for joining us today, and you may now disconnect your lines.